Hey, if I told you active listings are up, yet the inventory is starting to go down, would that make sense to you? Well, let's show you why that's happening in the Austin market, and let's see what's really going on out there. So let's look at current active listings here. Currently, we're at 11,298, 11.3, let's call it. Same period last year, which we're, because of the way weeks work, we're in what we call week 4 of May 2024. Last year we had 8862 versus 11,000. You can see the gap here is, I don't want to say the word dramatic, but it is a lot bigger, right? Yet our inventory, weeks of inventory is down. So let's show you that here in a second too. So we'll scroll down here. We're looking at active listings versus pending listings. If you've been watching me, for any of these episodes, you know this is my favorite graph because it shows the correlation here of how many new active listings went on the market, 1135 last week versus 928. But you see the jump from 872 for the previous week versus last week, 928. That's actually a 6% jump in activity. So what do I attribute that to? Well, let's scroll down to weeks of inventory. Okay, so let's see. We were previous week, we were at 12.5. We just dropped down to 12.17. So it's not a dramatic drop, but it's almost not quite a half a week's of inventory. So let's click on the reason why here. Mortgage interest rates. So mortgage rates continue to decrease. So it says second consecutive week, given news that inflation has eased slightly, the 10-year Treasury yield dipped, which means mortgage rates went lower. The decrease, albeit small, may provide some wiggle room for budgets. And it's not just that. I don't think it's really people's budget. I think it's the psyche of the market, right? So you can see right here, we were almost at 7.25 on the 30-year, and then it dropped a little bit, then it dropped a little bit more. So now we're just almost at a flat 7% instead of 7 and almost a quarter. So that in and of itself is causing people to buy homes and make a move because it's all about the consumer sentiment, not necessarily the $10 you save or $20 you save a month, because the rates really didn't go down that much in the last week. But the buyers are definitely out there, and the buyers that are getting pre-qualified are higher according to my lender sources, which is good for future sellers, right? So that's the good news there. And then one thing I do want to note is this is probably a little bit of a trend here. You see how these are price reductions, and you see it zigzags every week. Red is last year, okay? So you see from a week-to-week basis, it kind of goes up and down. But this year, which is the blue, it just continues to go up and up. So since the beginning of April, every week we've had more price reductions every single week, other than 1 week it receded a little bit. But now we're at 1,500 price reductions in a market of not even 11,300 listings or whatever. So that means that the market's repricing itself. 10% of the market is repricing itself every single week. Now, these are probably not major price reductions, because some people take the stance of small incremental price adjustments, which, if you know anything about me, I think that's the wrong strategy, but to each his own. Different realtors do different things. Different sellers do different things, but price reductions nonetheless. So what this tells me is that the serious sellers are getting their home, that really want to sell their home, are getting their home priced correctly so that they can sell their property. So got some real interesting stats on that as well. So I ran the average days on market of all the listings that went pending last week. Sorry for the scroll here, but there's a lot of stats here. So here's the interesting statistics, okay? The median days on market for listings, what we call active days on market. That means if you only had one realtor, is 30 days. So half of the listings that sold last week sold in 30 days or less. And the other half are still on the market, obviously. Now, if you look at averages, the difference between average and median is, median is the middle of the pack here. So the 491 sample that I took here, which are the ones that actually went from active depending or AC, which is an active status, to pending, which means they got through the option period. The average days is 61. Okay, now there's a number next to it right here, 72 and 35. That means if you had more than one realtor and you let go of the first one or their listing expired, you relisted within 90 days, you pick up the old days on market as well as the new days on market with a new agent. So 72 days on market is the current average if you had multiple listing agents, and 35 is the current median, which is kind of weird when you think about it. That means that some people are dropping their realtor within the first 30 days. That's the only way statistically that could change. All right, so bottom line is if you didn't sell your home in the first 30 days that it goes on the market, half the market did, and you're not one of them. So price examination is probably a good thing to do at that point. Going back to rates again. So we just got done saying that 7% is the current 30-year fixed on average across the nation. I am shopping a young man that was referred to me by my son, and he's the new Army recruiter here in Austin. It's what my son does. And I found a program from the Texas State Affordability Housing Corporation. It's a mouthful, right? I found a 5.75% fixed rate mortgage, what they call bond money mortgage. It's primarily for first-time home buyers, although if you hadn't owned a home in a while and you make under a certain income, then you're actually qualified for the program as well. So this program is based on your income more than anything else. So it's really targeted for first-time buyers or people that are buying homes in that genre, let's say under 400,000. So anyway, if you want more information on that, reach out to us. Our buyer's agents will have more information on that, and so do I. So rates continue to go down, and I expect that we'll see a lot more activity for the next couple of weeks. Now, keep in mind that you're going into Memorial Day weekend, so school's letting out. There's a lot of things going on. So the fact of the matter that we have this many pendings is actually really good. So anyway, until next week, we get to see the Memorial Day stats. I think we're in a pretty healthy market, and but if your home's not selling, I think it really just comes down to price. All right, we'll talk to you again soon. Call us with questions, call us about the mortgage, and don't forget to subscribe to our channel where we don't do just this conversation every week, but we're examining things like Zillow's estimates and that sort of stuff. So talk to you soon. Thank you.